Look, investing should be more than just YOLO stocks and crazy option spreads. It doesn't matter if you're an active trader or you barely remember the password to your brokerage account. Either way, you still need a way to choose stocks for the long run. My name is Jonathan, and today I'm going to show you a simple, repeatable way to find companies that can keep growing over time. Together, we'll create a short list of companies to consider using a stock screener that everybody has access to. And then I'll show you how a tool we've created here at Sectors Made Simple, the S&P 500 screener, can make choosing between those finalists way easier. Before we get into it, I've got a quick disclaimer up front. This video is meant to be educational and should not be used as financial advice. Past results don't guarantee future performance, so please do your own research as well. Cool? Cool. So, what actually makes a strong company? No, I'm not talking about the one that just had a really good week in the market or a hot earnings report. I'm talking about the one that has the potential to compound in growth over the coming years. Investors, unsurprisingly, have studied this idea to death and have come up with a few common indicators of a strong company. One of these is a handy checklist from Julie Stav's New York Times bestseller, Get Your Share. It has an acronym to make things easier. B, A, profit. We're going to use a few of those traits to help find our potential rising stars. Specifically, the letters B, E, P, R, and T. Mostly because those are the ones that we can easily screen for. Also, to keep things simple, we're only going to look at companies within the S&P 500. Cool. Setup's done. Let's dive right into FinViz. Here we have FinViz, and what we're interested in is the screener up here in the menu. To kick things off, we first want to filter to only show the S&P 500. So under Index, we'll choose S&P 500. Now we can get into Be a Profit, starting with B, which stands for beta. Beta is how fast a stock tends to move compared to the rest of the market. And if we're looking for something long-term here, we're trying to avoid any roller coaster rides. So to try and filter some of those companies out, under Technical, we're going to choose Beta and select under 2. This will help to filter out some of those super spiky companies. Next, we have our E, which stands for earnings per share growth. Let's be honest, we want businesses with growing profits, not just growing promises. So to try and accomplish this, what we're going to do is go under Fundamentals and set our EPS growth quarter over quarter, right here, to 15% or more. This will narrow down our search to focus on companies with that consistent improvement that we're after. Next, we have our P, which stands for Price to Earnings Ratio, or P&E. This will tell us how cheap or expensive a stock is relative to its earnings. Well, yes, we all love a good deal. Sometimes you may not mind paying a little bit more for quality. In Julie Stav's original checklist, the P&E should be below the S&P 500's current average. But to keep things a little simpler for today's example, and to make this be something repeatable without having to do a ton more research, we're going to use the average P&E for the S&P 500, which is around 25. So we'll go here to P&E and set it to be under 25. Next, we have R, stands for Return on Equity, or ROE. This will answer the question, how good is the company at turning its own value into additional profits? We want to find companies that have an ROE of 15% or higher, which tends to surface well-run businesses. So we'll go right here to Return on Equity and set it to over 15%. And finally, we have the T, which stands for Top Dollar or Price Action. What we want is to find companies that are at or near their 1-year highs. Because, well, for the lack of a better term, leaders lead. In FinViz, we can find this under Technicals, and we can do this by setting the 52-week high, or the high-low, to anything from 0 to 3% below high, 0 to 5%, or 0 to 10%. Pick the tightest one that still leaves us with a workable list. So right now, if we did 0 to 10, we see that we have 18 companies. That's more work than I want to put in. If we do 0 to 5%, we're down to 15. Still a little bit longer than I'd like. 0 to 3%, now we're left with 6 companies. I think we can work with that. With all these filters, we have our short list of 5 companies, because Fox is listed twice. We have CMI, FOX, SYF, TRV, and UBER. Now, let's go check out the S&P 500 screener and see if we can narrow down our search using these companies. Here we have the S&P 500 screener. This tool allows us to see and rank the 500 S&P 500 companies to see who the leaders are and who might be lagging behind. But instead of just using something simple like 1 month or 1 year returns, instead, every day we analyze almost 250,000 stock charts to create the simple scores that you see here. This tool has a lot of information to offer us, but we're going to keep things focused for today and save all the other stuff for another video. All we're going to focus on today is the total count strength, which shows us the overall relative strength for each company relative to the rest of the market. So for example, if we see A has a total of 66%, that means that it is outperforming 66% of S&P 500 companies. Let's take our 5 companies and see which ones are the relative strength winners. So we'll look for CMI, FOX, SYF, TRV, and UBER. By doing this, we can see the relative strength of each of these companies. And if we click on total to sort it from highest to lowest, a clear winner emerges. Cummins, ticker symbol CMI. That's really all there is to it. Hundreds of thousands of analyzed charts, summed up in a few simple scores. Using Be a Profit, though, isn't the only way that we can use this S&P 500 screener tool. You can feed in any watch list. Maybe something you found in your favorite newsletter, something on Reddit, or even a list of high dividend yield companies. With any of these lists, you can plug them in and instantly see who's on top today without doing hours of charting or analysis. Or if you want to try something completely new, you can explore our trading strategies that we've created using this tool to find things such as the top companies making moves in the market today. So really, the S&P 500 screener is only limited by our creativity and the 500 companies that make up the world's most valuable index. If you liked what you see and you want to try the S&P 500 screener for yourself, head on over to Sectors Made Simple to learn more and to grab a subscription to our tools. I'll put the link down below. Thank you all so much for joining me for this look at how we can simplify value investing with Sectors Made Simple. Hope to see you all back very soon.